Hello! How you guys doing? I hope you're doing fine. I hope you're doing wonderful. This presentation is for tech sector, Nasdaq, and I'm going to discuss oil later on. Beautiful. So, what happened on Friday? For the tech sector, we had a sharp sell-off, then a bounce back later this week. So what happened? So what do I see here? I see a head, left shoulder, right shoulder. Oh, Madonna mia, that's not good. I see a negative divergence between the price action in the daily time frame and the small ones in the stochastic. Very obvious. So what happened? I see the price action is below the 50-day moving average and the 10-day moving average, which is always bearish to me. So what caused the bounce on Friday that caught a lot of people? I think it is TLT bounce, which is the bond bounce. When the bond prices went up for the technician rally I talked about, maybe the algos bought, maybe some fund managers bought, thinking this is the high for the yield and it's going to go back down. But I really doubt that because they stopped at seller zone, as I talked about in my previous videos. So I think this is a confirmation that the bond prices will keep going down in the future because it couldn't hold the 50-day moving average for the Nasdaq. Good deal. So let's look at the weekly time frame for Nasdaq. So what happened in the weekly time frame? Let's discuss first positive or negative divergences that I really like all the time. Okay. So let's forget about this one right here. Let's look at the recent one. We have a high, higher high. We have a high in the RSI and lower high. So that's a negative divergence. And the RSI is really, really reliable. And I noticed throughout the years that every time that the RSI goes to oversold more and goes below, dips below this 70, a major correction happens more often than not. This was right in 2020, even though it went back up. But more often than not, these things spark corrections. There was a correction back in 2018, by the way. Okay, so what's going on now? We had the buyer stepping in last time and sparked the correct. I think it's a correction, especially when you go below the 10-week moving average. And you can check that on your time too. So as far as the Japanese candles are concerned, we had a bearish engulfing in the weekly time frame for the Nasdaq, and a confirmation the week after that. Good, beautiful. Let's talk about Apple. Apple had a reversal pattern going for it since late 2020, and we formed the left shoulder, head, right shoulder, and we break down from this pattern. We retested the breakdown area and we failed at least 3 times. So the measure move for this pattern is this number right here. Good deal. So even the same thing with the Apple, when the bond prices bounce back, Apple tried to rally. And after that, maybe the algos bought that and the fund managers or the professionals or the smart money sold it, thinking this is only a technician rally for bonds. It's not the end of the bond sell-off. Good deal. So we could see the bearish divergence and how much I like it usually. And this is what happened. So you are below the 10 and the 50-day moving average for Apple, which is really, really not very bullish. I really do believe we are in a correction for Apple. And I talked about in the past the measured move for this one and the measured move for this one. This is almost 2, if I'm not mistaken, from the low of of March 2020 bottom to this year's high. So this is a measured move. If we have a measured move, usually volatility hits as far as my experience is concerned. So let's talk about the weekly time frame. As I stated earlier, the 10-week moving average to me is a sign of correction. If you dip below it, more often than not, a correction takes place. You can look at the chart. Good deal. And more often than not, when the price retraced from a negative divergence, you hit a correction too. So high here, in the long duration, and even in late 2020 and the recent high, you have a higher high and lower high in stochastic, and now you're dipping below that. Good. So what do I think here? As I stated earlier in the bearish pattern, at least we would hit this number right here, maybe more. I really don't know. All I know is I would never touch Apple right now or the tech sector. Let's talk about Facebook. Oh, the smart money choice all the time. Oh my God, how smart you is. So right off the bat, what do I see in the pattern? I see a top and saucer right here. I can see an inverted cup and handle right here. Okay, so I could see a top and pattern just right off the bat, just looking at it. Okay, so what's bearish about that? MACD, bearish crossover, stochastic bearish crossover. The price action failed to maintain the 200-day moving average. It found sellers at the 10-day moving average, which is really, really reliable to me all the time. And the price action is still below the 10 and 50 and 200-day moving average. More often than not, Facebook gets into a major pullback every time it stays below the 200-day moving average back to back for 2 days. You can look at the stuff. I know some of you don't believe in technical analysis and only believe in yourself and the big tycoons and the smart people smarter than us. I'm sorry, we're not as good as you guys are, but at least we can just look at the chart so you can see every time. Most of the times, when it gets below the 200-day moving average for a couple of days, a sharp correction happens. Good deal. Ego is really bad. Ego is not your best friend. Ego is not your best friend. That's all I always say. So, this is the daily time frame for Facebook. And weekly time frame is the same. It shows me the pattern up close and without the noise. So you can see the inverted cup and handle. Okay? In the weekly time frame. Okay? Same thing. There's nothing positive about that. And the 10-period moving average for the weekly time frame is very important too. So this is a correction. Okay? This is Facebook. Let's talk about West Texas oil. So West Texas oil has been bullish for some times now. Sometimes it's really hard to analyze because of the production cuts from some OPEC members. But as far as the charts is concerned, right now we have a bearish evening star, which is extremely reliable in my experience. Yet we didn't close below the 10-period moving average. But nevertheless, this should mark a resistance. Like maybe 64 for West Texas would be a resistance for sometimes. This is how evening start works. You might go back up to test some resistance, but more often than not, you will find sellers here. Is this a top? I really don't know, but I think it's going to be a resistance for some times. Would I touch oil? No. Would I touch oil refinery companies? No. Would I touch anything with oil stocks? No. Good. I wish you guys the very best, and also the positive divergence. The negative divergence is extremely obvious here. I wish you guys the very best. Please like if you like, subscribe, share, encourage me to upload more, and do remember that this goes forever.